Did you know your landlords could be missing out on valuable tax deductions? Depreciation is one of the perks of owning an investment property, but too many investors overlook the potential benefits of claiming depreciation on older properties. As a property manager, you can help your clients maximize their depreciation claims by educating them on the items they can claim and how long they should last. Carpets, curtains, bathroom fittings, dishwashers, and washing machines are just a few examples of depreciable assets that can be claimed no matter how old the property is. It's important to note though that the rules regarding depreciation have changed in recent years, so it's essential to understand how these changes impact your client's claim. For properties acquired before 9th of May 2017, investors can claim depreciation on plant and equipment assets that form part of the property according to a quantity surveyor's assessment of the asset's remaining life and value. But for properties acquired after the 9th of May 2017, depreciation only applies to new plant and equipment assets paid for, installed, or included as part of the new property. But don't worry, there are still ways to maximize depreciation claims for your clients. Installing new plant and equipment assets can significantly boost the depreciation claim, as these items have a shorter effective life than the building structure, resulting in a higher write-off value per year. We've compiled a list of the top 10 depreciable assets with a higher cost and lower effective life, allowing for a more substantial depreciation claim on the next tax return. Number 1. Light fittings. With an average cost of $4,000 and an effective life of 5 years, your clients could submit a depreciation claim for around $1,600 in their first year. Number 2. Packaged air conditioners. Packaged air conditioning units have an effective life of 15 years and will depreciate at 13.33%. On a $10,000 AIRCON, which is the average cost at the moment, your client could claim $1,333 in the first full year of depreciation. Number 3. Artificial grass. The cost of installing artificial grass usually ranges between $2,000 and $5,000 and has a very low effective life of 5 years. So, if your client paid an average amount of $3,000 to install artificial grass in their investment property's back garden, they could claim up to $1,200 of depreciation in their first year. Number 4. Floating timber. Floating timber has an effective life of 15 years, but it's slightly more versatile than carpet, so it's more expensive. The benefit of the higher cost is a bigger depreciation claim. If we average the timber flooring cost, your client is looking at around $7,500. If they were to claim depreciation on that in your first year of owning it, they could claim up to $1,000. Number 5. Carpeting. According to the ATO, investors generally replace their carpets after 8 years, so your client can depreciate the value of it pretty quickly. Let's say they pay $4,000 to install new carpets. In that case, they can claim $1,000 as a tax deduction on their tax return. Number 6 and 7, curtains and blinds. The effective life of curtains is 6 years, while blinds have a 10-year effective life. So both depreciate relatively quickly. If your client paid $2,700 for their curtains, they could claim up to $450 of depreciation in the first year alone. And if they paid $3,500 for their blinds, they could claim up to $350. Number 8. Kitchen appliances. Kitchen appliances such as the cooktop, range hood, and oven are nearly always purchased in a set, so the cost is generally quite high. On average, your client can expect to pay around $4,000 to install all 3 appliances. With an effective life of 12 years, that means they could save $666 in their first year of claiming depreciation. Number 9. Split system air conditioners. Split systems have an effective life of 10 years. These will depreciate at 20% using the diminishing value method. So if your client pays the average price of $2,000 to install a split system, they could expect to save around $400 from their first year depreciation claim. And number 10, hot water systems. It has a high effective life and a lower cost than the other items on this list, but your client will save around $300 if they pay the average price of $1,800 for the unit. The ATO provides a comprehensive list of 6,000 depreciable plant and equipment assets that your clients can claim deductions for. But It can be overwhelming and time-consuming to identify all of those assets on their own. Your clients can order a depreciation schedule from a quantity surveyor that lists all of the depreciable assets in the property, along with their expected effective life and depreciation rate. Their tax agent or accountant can use this information to claim depreciation deductions on their tax return. So, if your clients haven't already done so, it's worth recommending that they contact a quantity surveyor to ensure they are taking advantage of all the depreciation deductions available to them. Head over to our website at juratax.com.au and drop down the Partners tab and click on Become a Partner to provide your details for one of us to reach out to you.